In today's video, we're going to talk about no money down options, the secret to FHA 100% financing. So stay tuned to learn more on how you can get 100% financing, no money down on your FHA loan. So you're watching this video because you're probably in the home market and you want to purchase a home. You may not have been financed yet or qualified for finance yet, and you are just wondering, how can I get into a home in this challenging market where sellers are still not paying closing costs, and maybe you have enough for down payment but not closing costs, or maybe you're short on both ends. So we're going to talk about what options we can use to get your down payment covered at least. So what is an FHA loan? An FHA loan is a loan that is backed by HUD, okay, Housing and Urban Development. The loan is typically 3.5% down, and it's a lot more lenient on the credit scores. Credit scores can go down to 580 with 3.5% down, and it can go down to 500 with 10% down. But in this video, we're going to cover the 100% financing with 3.5% down, because as of this recording right now, we do not have investors that will cover the 10% down payment for credit scores between 500 and 579. So not only do you get the benefits of lower credit score qualifications, you have a little more leniency when it comes to your debt to income ratio, because FHA does have some guidelines that are going to be a lot more favorable when it comes to getting financing versus a conventional loan. And the way that the FHA works is that there is a guaranteed mortgage insurance that is financed into the loan up front, and you will also have monthly mortgage insurance. So now that we got the FHA loan and what that is out of the way, we're going to talk about the basic qualifications and how this can really help you with the 100% financing. With 100% financing, as I mentioned, you will have the 3.5% down that will be covered by the investor as well. So there's a couple different ways that they'll cover the down payment, okay? Number one, there's one that, hey, if you take a little higher rate, that down payment assistance will be forgiven up front. Okay, the upfront forgiven option is definitely probably one of the most popular and widely used down payment assistances out there. So it'll be forgiven at closing. So you're still going to be borrowing 96.5%, which is 3.5% down on that mortgage, plus the mortgage insurance financed into the loan up front. The second option that you have is a piggyback second mortgage, which still covers the 3.5% down. However, there's a payback period on those. With the payback period on those, you'll have a certain amount of time that you have to pay it back, whether it be a 10-year loan all the way up to a 30-year loan. There is a payback requirement on it. And if it's typically a 30-year loan, that second mortgage is going to be higher on interest rates. And with some of our specific investors at least, we're seeing at least a 2% add-on for that second mortgage. So the whole concept behind all of this is that we can cover a large lion's share of your initial expense going into the home. So we will cover up to 100% financing. And sometimes if your credit score is strong enough, we could even finance an additional 1.5% into the loan. So that additional 1.5% will cover part of your closing costs as well, or some of the points that are required to get some of these down payment assistance loans. So I would definitely, take a look at everything. And I would say the pros and cons when it comes to this type of financing is that it does provide easier access into home ownership. However, with that, the con would be it's going to be a potentially higher monthly payment or interest rate. You really need to go ahead and weigh everything out. There are a lot of different down payment assistance programs out there. There are state regulated ones. There are like grants that are out there that are totally separate from the down payment assistance. And if you qualify for some of those grants, I would take that to your lender and ask them if they have an investor that actually works with that grant. Because if they do, even though there's that second mortgage on it, the investor will not have that add-on because it is extra work for them to do and it's higher risk. Whereas if it's covered by a separate entity, they don't have to have that extra, coverage or insurance, which is the markup on the interest rates, to kind of make up for it just in case there are default on it. Some of the most common sources for some of these grants, as I mentioned, are going to be your state housing agencies. There's a lot of 50 states, and out of those 50 states, there's going to be some sort of agency there that has some sort of down payment assistance or housing assistance or even housing counseling services that they provide for free. There are a lot of nonprofit organizations out there. For instance, I'm doing a loan right now for somebody, and this is a probate case where, a family member passed away. It got passed on to another family member, and part of those proceeds are actually going towards a nonprofit agency to be given out as scholarships for different items that this deceased person that I'm doing the loan for their family member. In the will, specific monies are dedicated for the nonprofit. So sometimes the nonprofit is donated for housing reasons. So if there is a housing nonprofit grant out there, I would definitely look into that, because those are typically fully forgiven or forgiven in a very short period of time. And then finally, your local governments. Local governments are always really good places to look, uncover these down payment assistance programs, but there are so many out there they're really hard to kind of navigate. However, with our relationship with some of our wholesale lenders, we're able to look into the approved agencies. So if you wanted to reach out to me and found out, hey, in your state, what are some of the local government or state agency programs that have down payment assistance programs, you can definitely reach out and I can look that up as well. One of the other things that typically happen with these down payment assistance programs, it's split 50-50, right? 50% of them are going to have guidelines that are going to have income limits, home buyer education courses, maybe even a requirement for you to be a first-time home buyer, certain property locations, and sometimes a commitment to live in a home for a certain period of time. Okay, those are typically going to offer a little stronger interest rate. However, as I mentioned in the pros and cons section, if you're just looking for entry into the home ownership game without a lot of out-of-pocket investment, there are programs that are designed for non-first-time home buyers and or people that don't fall into the home buyer education, property location, or even a commitment to live in a property for a certain period of time. So those programs sometimes do end up being a little more helpful. And it's really important that you read and understand the terms before you go into one of these programs. And some of these programs, if you have to pay it back, if you don't live in it over a certain period of time, or they find out that your income's wrong, they can come back to you and call you due on that second mortgage. And at that point, if they do call you due on it, they could either put a lien, or they may even start the proceedings of like taking the house back from you if you do not obtain additional financing or other financing that will cover the loan that is in compromise. How would you look for these programs? Number one, finding lenders that offer both options, right? That's really important. I think shopping for different lenders is very important. And, one of the things that I always say is like, the more you see advertising, someone's got to pay for it, and that's you, right? Going through a bank, going through your local lender or correspondent lenders is a good option. However, I would highly encourage you to also look into the wholesale channel, which is something that we're a part of as mortgage brokers. The difference is that number one, you go with the bank or the lender, you're working with the company directly, right? You're working with their direct underwriters and their direct processors. That's good if you need sometimes that quick communication. However, if you're giving ample time and you're working with a lender that is seasoned, the time really doesn't matter, okay? Because with wholesale, our advantage is that we can shop your loan with multiple options. So we're going to have multiple down payment assistance options. We have options at 580, 600, 620, 610, 605. And with all these different lenders, they're going to have different debt to income ratio requirements. They're going to have different reserve requirements and other factors that may make it a little more challenging. So if you're choosing just that one lender, just think of it that way, right? A lot of times we'll shop multiple lenders, let's say for the same down payment assistance program. And what we'll find is with lender A, we can offer a little higher interest rate. However, we can offer maybe a higher sales price, let's say at $250. Whereas if we go to lender B, they may have a little more, strictness when it comes to their guidelines, and that qualification may only be at $200,000, but it's a better interest rate. So at that point, I would weigh everything out and see, what works best. I think it's really important to work with a lender that knows their guidelines. They understand any potential overlays, which are additional requirements that you need in order for us to give you the loan. And then just having the proper paperwork, the patience, and your due diligence when it comes to doing the shopping. And remember to always consult with your financial professionals that you're currently working with, as well as housing counselors, because a lot of times they already have someone that they've worked with in the past. So with that being said, there are definitely a lot of options for you to get into a home. And in this instance, we're only talking about FHA and 100% FHA financing with down payment assistance. So if you have any questions or concerns, or you'd like to reach out to me with some questions on 100% financing or any of your financing needs, feel free to reach out. My phone number is 757-478-8493. My name is David Xie. I'm with the Xie Mortgage Team. If you like the content you've seen here, please hit the notification bell for any new content that we release. Ask questions below, anything you want to see, any videos that you would like for us to touch on. And don't forget, I'd love to talk to you. All right, talk to you later. Bye.